I mean, I don't think Palantir has convinced, let's say, analysts that, well, we can go back to the 30% growth year over year. So analysts are still like, okay, now we're still back in the 20% year over year growth. Let's see, show us what you've got, and then maybe we'll upgrade our expectations. Of course, it will probably happen when the stock is a bit higher because sentiment will drive the price. So yeah, I think maybe that's why the stock hasn't really moved much that in the last 6 months or so, in my
Well,
opinion.
you are exactly right. It's the earnings will be on the 5th of February, and
Mm-hmm.
analysts are just cautious. Are cautious because, well, Palantir is not really an easy stock to sell to clients, and probably they're already been traumatized, so now they're scared of being too optimistic. They want further proof of this reacceleration we were discussing. What I think are two interesting data points is that, as you mentioned, analysts are still expect Palantir to grow around 20% for the years to come. And if you really understand the business of Palantir, you realize that this 20% is not actually that much, especially if we mentioned, hey, the AI market, which is exactly the market where Palantir is expected to grow at 23%. This implicitly means that the analysts' expectations imply that Palantir would lose market share rather than actually gaining market share, which I think it is what is going to happen because essentially AAP is unlocking a lot of value. We have been seeing that with AAP cons. We have been seeing feedback from the bootcamps, and we know that Palantir already has huge clients proving use cases. So it's not only chat, but it's true business value unlocked, be that reduced time to produce, to manufacture, less time to manage patients in the hospitals. So the amount of use cases that are being available are so much and so effective that I believe Palantir is actually set to gain market share rather than to decrease market share. And a second data point that I found particularly interesting is that there was an analyst from Jefferies who said disclosed the weirdest report I've ever read. Essentially, he mentioned we downgrade Palantir from $18 per share to $13 per share. Why? Because the stock has run up too much. And I was kind of puzzled by that. But on the other hand, this analyst said, we are optimistic on the long-term trajectory of the business, yet we are still not very convinced of AAP monetization yet. So, and the stock went up too much, so we downgrade the stock. What this means to my eyes is that, look, wait a second. If an analyst that is still not very convinced is kind of skeptical, says that the price target for him is $13 per share, which is not that far actually from the current $16 per share. That to me is a hint that, okay, that $13 is probably a mental base from which it is hard to go below. Also considering that now there is a $1 billion buyback that potentially could be thrown on the stock if the management wanted, if the management sees the opportunity to actually to capitalize on a lower price. So with these considerations, I'm personally very excited to go into this Q4 earnings. I think they will be positive. If not, it's not the end of the world, I would say.
Yeah, okay, fair enough. I've pulled up the exact analyst that you've talked about right now, which I believe there was the same sort of, let's say, note about SoFi with some other explanations there, but also the stock has gone up too fast, and so that's why I'm now bearish on that company.
I mean,
Which to me doesn't make that much sense because I thought analysts are supposed to be long-term investors, not traders. But okay, I guess if
well,
you
I was expecting the analyst to be, I can't say long-term investors because their target is essentially a one-year target.
yeah.
But I find weird to say that a stock is now worth less because the stock has gone up. That is something that I really can't digest.
Yeah, no, I mean, it does seem sometimes like these guys are looking at ticker symbols instead of the company behind the ticker symbol, which again doesn't make that much sense. And also the timing of it, right? It's extremely strange that they wait until it drops from 21 to 16, $17 or so, and then release the note instead of saying at $21 when the stock had momentum, show me you've got conviction in your, let's say, sell rating when the stock has momentum and it is going higher and higher. Don't come out with the note saying, "Oh, it's gone up too much, and so now I'm downgrading to." I mean, it just shows that well,
I,
sentiment
I
follows the
think
price.
this was perfectly matching what a book called Halo Effect says, essentially hinting you'll see the most negative news exactly when things are really going bad. And that is no different from what happened actually all last year. Well, not 2023, 2022, when the stock was going down. You only could see negative articles. The stock started going up, only positive articles. So, yes, the timing of this article was very suspicious. And I could say, okay, when the stock went in no time from 15 to 21, that was a good moment to actually say, okay, maybe now it has run up a little bit. And that was what we discussed at Palantir Weekly. We discussed a lot. Okay, we are not currently buying at this price. We are not neither selling, but we are aware that the valuation is not attractive.